Hey, good morning, everybody. It is Tuesday, September 11th. Um, and I was just talking with our producer before the show. September 11th, folks. It's been 24 years now since that fateful day. So, in memory of that, we're talking the markets here today. So, I'm glad you're here. I'm sitting in for Kevin Horner today. Kevin's off traveling today, heading back east to one of our workshops, but I'm joined by Barb Armstrong in the chat. Always appreciate Barb. And, just a reminder for those of you who aren't familiar with Barb, I've been working with Barb for several years now, and she teaches a trading a smaller account class that you may want to check out. So make sure you check that out. That actually occurs a couple days a week. So Barb, feel free to put a link to that class in the chat. But in the meantime, feel free to follow us on X at Brent Moore's CS, at Barb Armstrong CS. And glad you're here. Let's go through some disclosures here real quick before we get to the markets. The information today is for general informational purposes only, and it's not an individual recommendation or personalized investment advice. We'll look at specific securities today, but those are not recommendations. Options do carry a high level of risk and are not suitable for all investors. And short options can be assigned at any time up to expiration, regardless of the in-the-money amount. The paper money application is provided for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. And all investing involves risk, including the potential loss of principal. Let's see, we go. There we go. What are we going to do? We're going to look at the overall markets, the general trend over the overall markets, look at some technical analysis on those, and look at individual sectors today. And we'll look at different time frames as well as support and resistance levels. You know the drill. If you've been here before, I see some familiar names in the chat. Glad you're here. And if you're new, we welcome you as well. So let's take a look at what's going on in the markets here. Just to orient you, this is the S&P 500, and this is a chart with a 20 and a 50-day moving average. That's kind of the typical chart I have on this chart. And you can see, look, we've been headed up. You know, when we talk about trends and uptrends, an uptrend is a series of higher highs and higher lows. So that's what we've had. This is the 20-day moving average. We've been above the moving average for the most part, the 20-day, since mid-April. So that's been a strong trend. That won't last forever. But right now, I don't know what else to say on it. I mean, we probably have some reasonable support kind of in this level. It certainly wouldn't surprise me to have a pullback here in the market. I don't, no guarantees, but every time the market kind of gets extended from its 20-day moving average, it pulls back to it, gets extended from that 20-day moving average, pulls back to it, extends, pulls back to it. We're now at the extended part of it. So certainly would not surprise me on that. We had some inflation data that came out this morning that certainly can affect the markets, but it came out mostly in line. We'll talk about that shortly. That was the CPI report. And so there we go. That's the S&P 500. Let's do this. Let's look real quickly, though, at just a short-term chart, just to see where we're kind of opening the markets here today. This shaded area is the after-hours session from last night, but here's the index. You can see we opened up. This is the pivot point from yesterday. This is what we call the R1 level. So this is just from a intraday, minute chart here. We've opened above that R1 level. What an intraday trader may look at is, can we hold this? This is now a potential support level on that intraday. Now, if you're a longer term trader, an intermediate term trader, you may elect not to even look at this intraday level here on this. But if you are, this may be kind of a key level. Can we hold those? Well, kind of the open for the day, which coincides more or less with that R1 level on that. Okay, let's flip on back to our daily 6-month daily chart, and let's just take a quick look at the let's look at the NASDAQ, how about? So here's the NASDAQ, kind of a similar thing, a little bit more volatile, but everything I said before in terms of, yeah, is there a potential support level? Yeah, I'd probably call that support level kind of around here for the lows. Would it shock me to break below the 20-day? No, it wouldn't shock me. We've broken below the 20-day, but it has, each time it's kind of promptly bounced here on this. And so again, we're kind of extended up to the higher side. This reflects a little bit of a difference. The NASDAQ, by the way. The NASDAQ has, more tech representation and tends to be a little bit more volatile. And you can always see that, by the way, the representation, if you go to the Market Watch tab and go to Visualize. And then you can look at the index. Here's the S&P 500 index. When you look at that S&P 500 index, yes, it gives the individual stocks. I think a lot of you know how that works. The bigger the box, the bigger the company. But it also kind of breaks it up by sector. Here's IT. You can see of this whole, so call that whole 100%. I don't know exactly what percent. Sorry, that was a terrible line. Trying to draw with my mouse here. All this shaded area here is the IT representation. How big is materials? Materials is like this big, okay? Real estate, this big. Utilities, this big. So you can see, just how big that is. And if you switch over to, for example, the NASDAQ 100, basically half of the NASDAQ is IT. Probably another quarter of that is communications. Discretionary, another, let's see, if that's 50, 25, another, I don't know exactly what that is. That's probably another 15% or something in discretionary. And then everything else is itty bitty there on that. Okay, so you can always kind of check that representation there on the chart, just on that Visualize tab. Now, let's move on and look at some other things here. One thing I would mention is, obviously there's different segments of the market, and different segments of the market move differently. So what I'm going to do here is I'm going to shift to a percentage chart. Here's year-to-date percentage chart on the NASDAQ. Let's go, and so up about 14% year-to-date on the NASDAQ. Does that kind of meet what your perception is? About 11.5% on the S&P 500. But let's kind of break this down into the value and growth components of the market. S&P as a whole, about 11.5%. For the year, growth is up about 15.5%. Value stocks have been up about 8% for the year. I would say, in general, and this is just a generalization, if the NASDAQ is doing fairly strongly as compared to the S&P 500, which it is, then it's probably more likely you're seeing growth outperform value. And that is what we've seen. This is value. It's not, not terrible, 8% for the year, but it is certainly outperforming the growth performance, the growth aspect. Now, if we switch that time frame down to, say, a month, okay, you can look at most time frames throughout the year and growth is outperforming. But over the past month, value is up 6%, growth is up about 4.5%. So value is trying to catch up, so to speak, on that. So here's the S&P 500. Let's look at the VIX here and just see what's your feeling on the market here. The VIX can kind of give us an idea of that, perhaps. VIX is about 15%. About roughly 15% on the VIX, which is relatively low. Now, what's low, what's high? I would say for the VIX, and anytime you're looking at implied volatility, compare it to its own history, okay? And you can see where we are right now. I have my cursor there, and compare it to the data points we've had. Obviously, it spiked in when the market was kind of crashing in April, but it's relatively calm here right now. People seem to be feeling fairly good about the markets right now in some ways, but in other ways, there are some concerns. And you can see that reflected, I think, when you look at something like gold futures. Here's gold prices. Someone I saw in the chat said metals, something about metals. I didn't see that. But here, this is a precious metal, obviously. This is gold futures. We've had a pretty strong run recently in gold. One reason, there's different reasons people buy gold. Let's talk about a few of them. And by the way, there's a survey link in the chat. We appreciate your feedback, everybody. Why do people buy gold? Well, one reason people buy gold is just to diversify a portfolio. You know, you think of a portfolio, when people talk about a portfolio, they, you know, a lot of times you'll see like a pie chart or something, and they'll say, well, I'm going to have X percentage in stocks and Y percentage in bonds, and then in, you know, real estate, I'll have a certain percent, and you know, a lot of times they'll have a precious metals percent or a gold percent. Okay, so that's one reason, just to try and diversify the portfolio. But beyond that diversification, a lot of times people will view gold as a kind of a flight to safety instrument. In other words, if you're maybe concerned of, for example, market valuations, maybe stocks seem to be a little bit pricey to you, well, people will run to gold. Or maybe people are concerned about inflation. Well, where do you go if you're concerned about inflation and you're trying to protect yourself against inflation? Well, some traders will look to gold to do this. And yeah, Carol said gold is a safe haven. Yeah, it's deemed to be, you know, and there's no guarantee it's going to stay up or anything, but it's deemed to be more of a safe haven, absolutely. So it's more than just diversifying a portfolio. It can be potentially an inflation hedge. It can also potentially be just kind of a flight to safety, a safe haven instrument there as well. And, you know, also, you know, just keep in mind, anytime we're talking about prices of commodities, there is a supply and demand element to it. What's driving the price up ultimately? Well, there's more demand for gold right now as opposed to the supply. And that's what's shooting that up. You can look at other metals. Here's silver. Well, silver's done pretty well lately. Silver's slightly different than gold in that gold is kind of, I mean, yes, there are industrial applications for gold, but primarily it's just kind of a precious metal that people use for that purpose. Silver has more of an industrial component, and you can see the strength that we've seen up in silver. It's kind of gone up, maybe flagged a little bit, and a break below this level would be considered to be, I think by some, a support break. And then, you know, you probably have, I don't know, we've kind of had this kind of channel down here. I don't know. I mean, something, I don't know exactly how to draw that, somewhere down there, but we've marched up pretty strongly there on that. And, you know, to Gary's point, another reason people look at gold is, you know, people are concerned about the strength of, or the devaluation of the US currency, of the dollar. And so that's a challenge with that. If you look at the dollar, here's the dollar. This is what the dollar has done. Okay? This is what the dollar's done. This dollar weakness has certainly, well, has probably helped gold in the process there. Okay? And you know, I don't, right now we've been kind of treading water here, I guess. The steeper decline has ended, but the dollar going down can typically help commodities. That's kind of the precious metals in particular there on that. And that's what we're seeing. So yeah, thanks for bringing that up, Gary. And so there we go. That's those are, kind of that. What about oil? Oil is another kind of big commodity. Well, actually, before I go to oil, what about copper? Copper's been here's another metal. Very different story with copper than we see with the precious metals. Copper is not a precious metal, it's an industrial metal. And it's, of late, we had the big drop. Of late, we've had some higher highs, higher lows. So it's starting to creep up here a little bit. But a lot of this is just going to be kind of a demand based. A lot of people will look to copper as a means of kind of trying to look at worldwide demand. It's kind of, since it's an industrial metal, particularly like demand out of China, as kind of an economic forecast vehicle there on that. Okay, so those are kind of a look at the broad market and some different areas. And let's just do one more. Let's go to oil. And as I mentioned before, there's a supply element and a demand element. I'm going to move this just a little bit here. I'm going to say we probably have some support around the 62 level. We also could say we kind of have this thing going on here that's kind of a descending triangle. Traders would look at this, and when you see a triangle like this, or even a channel, a descending triangle may have kind of more of inherently a bearish bias by a lot of traders, a lot of technical traders here. But they may deem it to be more bearish if we break. We kind of may be in a little bit of a from a technical trader standpoint, we may be in a little bit of a wait and see mode to see if we break below. This would be more of a bearish break, or break above. This would be more of a bullish break on that. But of course, we'll see. Factors that influence the price of oil. There's supply factors, how much drilling, how much refining is taking place. Well, would be more drilling, and how much oil is coming out of the ground. Geopolitical events can certainly affect geopolitical uncertainty. Sanctions on things like, Russia sanctions and adherence to that can certainly affect the price of oil. And geopolitical tensions, for example, in the Middle East or something like that, or in Ukraine, could certainly affect the price of oil. And then there's the demand side. The higher economic forecasts are, then more likely that's going to push up the price of oil there. Okay, so let's just kind of look at those markets. Let's look at some individual stocks here, though. There are some stocks that are in the news. But actually, let me mention this before we do that. We did have a CPI report today. CPI came out today. PPI came out yesterday. And PPI came out quite a bit lighter than expected, which is a good picture for the inflation. A good bit of data on the inflation front. And you could see we actually had a nice little drop, and this is the 10-year, by the way. And if you want to take that number and actually make it the true yield, you could divide it by 10. Here's the yield. And we're pushing down towards that 4% on the 10-year. Okay. Now, this isn't directly correlated. It's not perfectly correlated to the Fed funds rate, which is what we talk about with the Fed lowering interest rates. But you can see this is reflecting a general sentiment and a lowering of interest rates. For a while, it looked like 4.2% was kind of like a support, a floor in a way. Well, we've broken through that. today's CPI report was mostly in line. It was a little bit higher. The month over month headline CPI was 0.4% versus 0.3%. But all the other numbers, core CPI, were in line. So it's probably not going to change most likely, I don't know, going to change the Fed, what the Fed is going to do in September. And the market seems to reflect that. I think if it came in super hot, I think most traders probably believe the September rate cut is baked in at this point, but you never know. Can't make any promises on that. But definitely lower of interest rates, and that helps on the inflation front too. If this is more reflective of the inflation, is maybe the way I want to say that here. So we'll see on that. Now let's look at some individual stocks here. NVIDIA. Obviously, NVIDIA is a big semiconductor stock. We could look at the SOX index, but NVIDIA is the biggest component of the SOX index. In fact, NVIDIA is the biggest component of any index right now. It's up 0.4%. It was upgraded today. D.A. Davidson upgraded NVIDIA to a buy from a neutral with a price target of $210, up from $195. So not a huge move on NVIDIA today on that news, but I think obviously on any day there's a lot of companies that are being upgraded or downgraded, and even if it's not having a huge effect on the stock right now, this is a big enough stock that I think it warrants attention on that. Other upgrades in the market today, other stocks you may look at, in that regard. Zscaler. Zscaler is kind of it's not NVIDIA in terms of the size of the company, but it's a name that a lot of people are familiar with, kind of a cybersecurity company. Up 3.25% today on an upgrade. Freedom Capital Analyst upgraded Zscaler to a buy from a hold with a price target of $320, up from $280. So there you go. The stock was not super strong. This broke it above its 50-day moving average. So there you go. There's another stock maybe to keep an eye on today. Here's another one for all you pet lovers out there. Chewy. Chewy upgraded today, up 1.5% after a big fall. Their earnings wasn't met favorably in the market. Let's look at this kind of candle pattern here. This is a little bit of a Harami pattern. Big body of the candle yesterday. Today's body is inside of that. The body of this candle is inside of that. So maybe picking up support. Seaport Research upgraded Chewy to buy from neutral with a $47 price target. Okay, so possible support here. The lows we had down here, these were all over the body of the candle there. Lows down here, we almost reached that after earnings. Looks like we may be recovering. Now, looks like we may be recovering is a far cry from an uptrend or it's going up much, but it's, if a journey of 1,000 miles starts with a single step, maybe this is the first step on this one right here. So those are some companies in the news that have upgrades that may be of interest to look at. What about Apple? Apple, obviously, they had their event, I think it was 2 days ago, wasn't it? And the market didn't seem to love the new product line. There wasn't nothing terrible, it didn't seem like, but it also seemed like there was nothing that wowed the customers, the clients or investors. And so the market has sold off on that. But we did have some downgrades on Apple. Philips Securities downgraded Apple to reduce from neutral. So Apple seems to be shrugging that off fairly well. They're up a little bit today. And DA Davidson downgraded Apple to neutral from a buy. Price target, they're keeping at 250. Okay. So, from a technical standpoint, yes, we've had these downgrades, but not a terrible chart, I would say necessarily. Potential support kind of in this area. We broke above that. We bounced, touched, came down near it, looking like maybe a little bit of a bounce. We've stayed well above our 50-day moving average. This would be kind of a key level, though, probably for a lot of technicians, I think, because this is the low we had in August, or at least from after the big move up there. And after a pretty strong retracement, we're picking up a little bit today. So is this going to bounce and continue to go up? Remember, if you are deciding, let's say you're a trader and you want to look at looking at it from a trading standpoint. Sometimes, this may or may not meet an entry rule for you. There's some bad things about this too, right? But if you are, when you can get in near a support level, that can kind of help you from a trading standpoint in terms of reward to risk. You may consider a target. You could look at maybe this high here. I'm going to try and draw this as straight as I can as a potential target price. You could use this as a potential target price. So if you consider where we are right now, right there, right, where we are right now, you can see how much space we have before, here's one potential target, here's another potential target. Yeah. And the difference between that and a support level. And if we put a stop a little bit below a support level, of course, the stop doesn't guarantee we're going to get out at that price, but it can help you have we'll say a healthy reward to risk ratio on that trade. So for example, if we call support, I'm going to call it right around 225, but I'm going to go a little bit below that for a stop. I'm going to go 1% below that for a stop. 225 times 0.99, and we have a stop then at 222.75. Okay, so there's my stop. The current price of this is something to keep in mind when you do this. The current price is 228.62. That is a $5.87. So basically, that's about a $6 difference between entry, if we got in right now, and entry, and our stop. That's a $6 difference there. Again, it doesn't guarantee we're going to get out exactly where that stop is. But now, if we say, hey, I've got a target price, I'm going to try and draw this fairly straight. Target price, let's see, that's 230, about 234 probably, something like that. Let me just get out of that and put my cursor to where that's right around 234. The difference between our entry price and our target, 234 minus 220, we'll say 9, is about $5. So in that case, that's basically a 1-to-1 ratio. If our target is up here, though, around 241, that gives us a much more positive. And this, you need to ask yourself if you're a trader, does this is this a reasonable target? Because sometimes when you look at it, sometimes if you look at it and you're seeing a potential target, you go, well, that seems like a kind of a stretch here on this. But and you'll just have to judge. Does this seem like a stretch to you? So I'm going to say 241.32 as my target. My stop I already wrote down as 222. If I wanted to do a trade on this, I could simply right click, buy custom with the stop. It will come up this way. Actually, that's not what I want to do. I want to make a bracket order. I'm going to right click on it, buy custom with an OCO bracket. What's an OCO bracket? An OCO bracket is a one cancels other bracket. In other words, this is our entry order right here, this first line. Right? This green line right here is our entry order. That's the first triggers part of it. The first order, the buy order, triggers the rest of it. The rest of the order doesn't become active unless that first order fills. Then these two orders are OCO orders. One of them is a target price, that's the limit, and one of them is a stop price. That's if things go south on us. And if that's the case, then if the stock goes down and hits our stop, it's going to cancel out of the limit order. Or if the stock goes up and hit our limit or target order, it's going to cancel the stop. Do you see the purpose of that, why you want them canceled? Because if they don't cancel, what would happen is, let's say you bought, say, 100 shares of Apple, and we went up and we hit our target and sold that 100 shares of Apple. If the stop order didn't cancel, we'd still have another order sitting there waiting to sell another 100 shares of Apple. So that's what a first triggers OCO order is. Sometimes we'll refer to that as a bracket order. When you're doing this, probably the way most traders are going to do it, we're going to make it a good till canceled order on our exits. Good till canceled, good till canceled. This is a shorter term swing trade we're looking at here. Our limit price, I wrote it down earlier, was 241.32. 241.32. Our stop price was 222.75. 222.75. Okay. And then here's the current price. Okay. That's a limit price. Could you do a market order on the buy? Probably. You know, the market is open. Apple is a very liquid stock. There's not many stocks that are more liquid than Apple. The concern often with, doing a market order is, I don't know what price I'm going to get in at. That could be a valid concern. The more illiquid or the less liquid the stock is, probably the more important it is to do a limit order here. But if you do a market order, the question is, what price am I going to get filled at an Apple? There's no guaranteed price. It's going to be the market price, but I guess it'd be pretty close to that. So I'm going to confirm and send. Make sure you just read through this. Make sure it makes sense. We're selling at a limit. That's the target price. We're selling at a stop. That's our stop price. And I'm just going to send that order. Okay, there we go. It goes in, it fills on a limit order right away. That's what we have here. Okay, so let's see what we go. Let me just double check questions here. Looks like Barb is doing an awesome job taking care of that. So thank you, Barb. Appreciate that. So that's just an example trade on a stock that actually is in the news for kind of a not a great reason, in other words, it had a downgrade, but the stock's actually up despite the downgrade. So I would say that downgrade is probably not as significant for this. There are other companies that have had downgrades that we should probably look at today. AMD downgraded. Erst Group downgraded AMD to a hold from a buy. UPS and FedEx were both downgraded. The company is holding up pretty well. UPS is holding up pretty well in spite of that. Although the overall trend of the stock is not doing very well. Another, we got earnings come. This is one of the big earnings. In fact, let's look at what's coming out with earnings here that's coming up. Between now and next earnings season, the official start of next earnings season, which will be kind of early to mid October timeframe, there are still a few more significant companies that are going to have earnings. This is a big bullish engulfing candle right here. So that's a nice big bullish candle for a lot of technical traders. And so there we go. Let's look though at our earnings calendar. Let me go to calendar. We're just looking at earnings. This is just S&P 500 here. And what today's the 11th. So S&P 500, we've got Adobe earnings coming out tonight after market close today, okay? We had Kroger this morning. We'll take a look at that in just one sec here, okay? Kroger came out with earnings. General Mills, but I want to look at kind of the biggies here. FedEx was one of them, okay? Someone I wanted to point out. We just looked at that. Lennar, that's a housing. Micron, September 23rd, excuse me. Costco, September 25th. So we do still have some bigger companies coming up with earnings by the way there on that. So in the chat, there's been some discussion, I think, on dividends. If you want to see what companies are coming up with dividends, there's going to be a lot. You can always check dividends here and look at dividends. I'm going to narrow this down just a little bit and just look at the S&P. Well, let's just look at the Dow companies. Well, we'll look at SP 100. How about we'll narrow it to S&P 100 companies. And you can see what companies are coming out with dividends. And so, yeah, when a company has a dividend, it's going to drop by about the amount of dividend approximately. Now, if the market's a rip-roaring good day in the market and everything's going up, that stock is likely to go up despite the drop in the dividend. It's going to just go up less than it otherwise would have given the dividend coming out there. So, for example, here you had FedEx. We had a $1.45 dividend on that stock, and it dropped that day, which probably isn't surprising. But you have to kind of consider how big the dividend is compared to the stock price. $1.45 on a 228 stock, that's reasonable. But if a company has, a 20-cent dividend and it's a $200 company, the amount of change is probably going to be almost imperceptible in that case. All right. So we said Kroger came out with earnings. Let's take a look. See how Kroger's reacting. Interesting candle today. This came out this morning. Initial reaction, up. After further consideration, not so much. We're basically back to break even from where we closed here yesterday. This is where we are today here on this. So, and often we see that. You'll see that after hours. In fact, we saw this in kind of a mini way on Oracle the other day. Did you guys see Oracle? Oracle yesterday was like gangbusters. ORCL jumping up yesterday. Huge move. I was looking at earnings after hours on Oracle this day, okay, right when earnings came out, and the initial move just for the first minute, okay, admittedly it was very brief, but the initial move was down. You get initial data that comes out, headline data, and people go, oh, good or bad. They make that initial judgment, but then they start to look at the details and they get more information, and then they can change their assessment. And Oracle, then it was like, wow, huge, right? Huge. So we're seeing that kind of in a smaller way here with Kroger. Initial reaction seems to be positive, but right now it's kind of come back to earth, back to reality here. Kevin said Kroger's earnings call just started here. Now let me just see, and I want to wrap up here, but let me just mention one more thing. Let's just take a quick look at sectors today before we go, and just see what sectors are going up and what sectors are not doing so well. Okay, this is a relative strength chart. Okay, it's a 6-month chart. This is not the performance of the sector. This is the performance of the sector as compared to the S&P 500. You can see we've had some strength up and down, but general outperformance, we'll say, of that since August 4th, which is where I'm pointing, of consumer discretionary since that time. Staples, just the opposite. Staples has been an underperforming sector here. Healthcare, more or less flat here for the past month or so. Financials, kind of going down a little bit over the past month or so as compared to weakening in terms of as compared to the SPX. These are all relative strength. Infotech had a huge run, was grossly outperforming the market, but lately we've flattened out a little bit here on this. Communication services has been like the star of the market of late here. Communication services outperforming other sectors in the market here. Utilities, not so much. And real estate, not so much, going down. That's the SPX. Energy, not doing great. Materials, industrials, doing very poorly. Communications has really been the best performing sector with consumer discretionary. Okay, doesn't mean they've affected the market as much, because remember that IT sector, which is the biggest sector, can have the biggest effect in the market. But when you get a sector that's pretty big, like communications, and discretionary is pretty big too, that performance can help drive that market up. Okay, everybody? There we go. Just as we wrap up here, markets up about 0.5% today. So continuing that trend up, we've hit an all-time high again on the SPX right now. Hey, thanks for joining me, everybody. Appreciate you, Barb, for helping me out in the chat. Appreciate your comments and questions, everybody. And there we go. Make sure you subscribe to the Trader Talks channel. And please there was a survey link in the chat I think I saw earlier too. So perhaps, Barb, if you could repost that. In fact, I'll try and get that real quick here, because by the time you hear that, where'd that survey link go? If you would fill out that survey, we would appreciate your feedback on this session. All right, everybody. Hey, thanks for joining us. Have a great rest of the day. We'll talk to you later. Bye-bye.